Okay, everybody, here we go. It's me live, and it's you. We're all alive, loving life. I guess so. I need a new hairdo. It's getting too damn long here. I'm just looking at myself, but that's okay. Anyway, post market wrap up on this Wednesday, June 21st, 2023. I got 2 pages of notes here I want to cover with all of you. Let's start off with this market here. Okay, nothing really. We had the biggest loser today was the Nasdaq falling about 1.25%. Dow finished down about 0.3. Nasdaq down about 0.5. Okay, whatever. Markets go up, markets go down. We did get a warning though from Goldman Sachs about a significant drop moving forward. We'll hold that thought till we get there. Debt market today. 10-year yield not moving around too much. The dollar got hit. And even with that, even with the dollar, let's put this together, okay? We're friends, you and me, right? Even with the dollar falling on a relative strength basis, thank you, Mitch. Of course, silver got hit. Gold took a little hit. Silver's very volatile compared to gold. Gold is pretty stable. You get these crazy swings with regards to silver. It's common, but look, good. Let them play their games. We're going to play our games. There's no way they can continue to inflate the way that they are, and this all not get real at one point. It's going to get very, very, very real. You can count on that. All right. So as I was saying, gold and silver under a little pressure here, especially silver. You got crude oil catching a bit up like 2%. Cryptos really getting bid up here. Bitcoin Cash like 26% higher today. Bitcoin over 30,000. Okay, lovely and fantastic as well. Very volatile space. I mean, the most volatile space I think on the face of the earth is obviously the crypto space here. It's a yo-yo into some kind of new realm. It really is. If you think about cryptocurrency versus pretty much everything else, it's a new asset class, believe it or not, and the market's still trying to figure it out. I got horns on my head. My hair's sticking up. Don't say I got horns on my head. What are you saying that for? I don't like it. Whatever, man. Greg is El Diablo. I'll fix my hairdo. My gosh, man. Has the mania died? Hold that thought. We'll get to the mania and Goldman Sachs in just a little bit here. But I want to talk about a couple of things. Let's start off with the thing. The mummified creature sitting behind the Resolute desk today. Okay, for those of you that get offended, I am not picking on an elderly man who's demented or anything like that. It's just an object. It's a thing, and I feel I have every right to speak out the way I want to with regard to that thing sitting behind the Resolute desk right now. Now, as we all know, every puppet sitting behind the Resolute desk likes to take credit for the economy when it's doing good, or the stock market rah 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 when it's going higher. But this is what Bidenstein said. You ready? He's keeping his fingers crossed. You can't make this up. That the Federal Reserve provides us with a soft landing with regard to the economy. But I thought these were his economic policies. You see, well, our economy's over. It's literally dead and buried. It's not even on life support. It's just whatever it's doing ain't pretty, honestly. But imagine being a sitting president and saying, "I'm keeping my fingers crossed. My fingers are crossed that the Federal Reserve is going to provide us with a soft landing." Imagine. It's just, thank you, Carlos. You can't make it up. You can't make that up. No one can. But that's what's going on here. Now, with regard to the supreme today, and I'm talking about Powell. I hate that man. I really do. Fed Chair Powell, vomitous mass thing. The other creature. Sometimes he hangs out with us, Jerome. Where are you? Jerome, I know you're here. Dude, dude. Let's talk, you and me. Winston, thank you. Yeah, exactly. If the banks warn us, we should think the opposite is going to happen. Hold that thought too. But anyway, so Powell today testifying before our imbeciles that are supposed to be, running the country, although they don't run the country. They sit there. They're all slaves to him. Thanks, sir. Thank you for your service. Can I lick your toes? Whatever it might be. It's like the guy walks in the room and it's like the second coming or whatever it might be. Whatever. But he went on to say, just listen to this. Okay. Quote, the Federal Reserve's inflation fight has a long way to go. But I love this. Inflation is moderating. Oh, it's moderating. Let me look up that word. Moderating. They use these obscure terms because no one really understands them. Neither do they. You understand that it's moderating, but what he can't tell you is inflation is continuing to rise. And the other thing is this. Let me ask you, because I didn't hear a peep. I was trying to follow this today. Why is it, in your opinion, and I really want to hear from you, that not one single one of our loving, caring puppets that are supposed to be, representing the American people, thank you, Metal Max 1970. Not one said, okay, Mr. Powell, so inflation we're in a long fight and it's moderating. Let me ask you, sir, vomitous mess, puke. Why is it that every single one of your projections, sir, has been completely wrong? Why is it that every projection out of every pie hole that wants to open their pie hole, I'm talking about ghouls, I'm talking about Lex Luthors and all these other freaks over there, they've all been wrong, really? Oh, how is it that there's no accountability? Thank you, Chris. Honestly, people, why is it that no one asks that question? How is it, sir, that you, Powell, and all of your other creatures that dwell in the halls of the Federal Reserve have been so wrong? How is that? And where is the accountability? You know where it is? It's deep in the heart of the gabagool. I'm talking this deep. Okay? This would probably come out your mouth if I was going up your gabagool. You see what I'm talking about? I mean, it's just insane. But this is where we're at. Now, here's something else. I'm going to get to Goldman. All right, just give me a minute on Goldman. Hold on a minute. While we're talking about Powell, this is another projection. How many of you are willing to bet that this prediction is going to be wrong too? Or his projection, just like the rest of his projections have been wrong by about 100%. Now, Powell expects that housing inflation will come down significantly in the future. At one point, it's going to happen. Obviously, that is going to happen. Okay, we have a stock market hyperbubble. We have a freaking real estate hyperbubble, a commercial real estate freaking ultra bubble. But he wants you to know, Powell, okay, that how it's going to come down significantly. You make it up. Make that up too. How many of you really believe that you could make this stuff up if you tried to? It's impossible in my view. All right, now. This is something else I want to talk about before we get to Goldman, which is just going to be nonsense anyway, but hold the Goldman thought. So obviously, maybe some of you are invested in money market accounts, and these are kind of diversified accounts, low risk kind of things. Thank you, Intrepid Soul. Okay, so what these money market managers are now doing is generally, okay, and you probably know this, most of you already, but I'm just going to sketch this out for you real quick. Money markets, again, low risk. They're supposed to be a low risk investment. A lot of people are invested in these kinds of things. And as with most investments, there is an allocation to cash, believe it or not. Okay. Now, what these money markets are looking to do is vastly decrease their cash holdings. I wonder why. But what they're doing here is reallocating or allocating those funds into debt units. Okay. So let's see. No matter how you want to slice that, you want to hold $1, you want to hold cash, I think you're out of your freaking mind. What do we know is going on? Central banks are wiping out the purchasing power of their currencies by design. Period. Now you want to invest cash into a debt instrument, and you got the debt market, which is the time bomb, thank you, Mitch, again, it's going to go off. It's just a matter of when it's going to go off. And it's going to hurt all these people holding, obviously, these money markets that are trying to, grasp for yield here. Anyway, you can't make any of this crap up. Excuse my French. Anyway, so let's talk about Goldman Sachs. Goldman Sachs, the Wall Street super bank. Yeah. Let's see. Goldman Sachs, the number one bank, the bank with the largest exposure to derivatives. I think over $55 trillion. That's a big, fat number. So Goldman Sachs warning on a drop with regard to the S&P 500 because in their words, the market is grossly over-owned at this point. Again, we had the mania. One of you mentioned mania, Goldman Sachs. There was clearly a mania here, people. And you know what gets to me, and I'm sure it gets to you too. You and I were watching the debt market. We're watching the Mannarino market risk indicator. We're watching it climb, 10-year yield climb. The bond market acting like very unstable here. We get a rise here. The stock market starts getting shaky. Then all of a sudden, by a miracle just happens. Just a miracle. Miracles do happen, yes. And obviously, it's the central banks, the Fed in this case, buying more debt, pushing the 10-year yield down. The market goes, oh, good. Start spraying the shorts all over the place, and you get these mania phases. And this pause here, this Federal Reserve pause. All right, with you and I, we nailed that one to the wall. A lot of people said no. We stuck to our guns. We said yes. Volcker, no, they're never going to bring back Volcker. No way. We'll talk more about that in a second. So we get the pause, okay, and the market got all giddy. What was that? That was a signal to the market via the Fed that don't worry, we're gonna have your back. Now going back to this here with regard to Goldman Sachs warning of a drop with regard to the S&P 500, significant downside risk. Okay, I guess we'll wait and see. If there's one thing that I have learned here, and I'm sure most of you, is by keeping even where the MMRI, Mannarino Market Risk Indicator, again, free to you, free to everybody, link in the description of this video, clearly shows us that this market isn't a high risk. It's high risk. We were in the green when this thing first started off. Now we're in a high risk zone, and the market seems to still be giddy off of it, okay? But it's, again, the market seems comfortable, let's put it that way, where risk is in this market based on what's happening in the debt market, because it's just being pumped, and then on top of that, pumped even more. Understand? So when you hear, we've had, Morgan Stanley repeated warnings with regard to this market. I think no one has warned more than Morgan Stanley about the market's going to fall, the market's going to fall. But it just seems to be an elusive thing. The market just seems to be going higher and higher. We don't get real corrections anymore. We don't get anything that could even be considered a pullback anymore. But Powell does expect that inflation is going to drop significantly at one point. Oh, yes, but it's got a long way to go. But we're moderating. Oh, yeah. Someone define that for me. Anyway, I want to hear from you. What do you think about this with the money markets here? Now they're reallocating cash into debt. I think that's a huge mistake. I don't think they should be in cash, but I think there's better places to put it, in my opinion. People are going to get so burned, as they usually do in this market here. Excuse me. Because it catches everybody by surprise. Thank you, Indy. And that's how it's designed. It's designed to take people by surprise. And when, again, this market decides to really fall, and it's going to at one point, it's not going to begin nor end in the stock market, nor the S&P 500. It's going to begin and end in the debt market. And I'm not talking about a 20% or 30%. We're talking about an 80, 90% drop in this market, which would maybe be some kind of reality. No one knows where the bottom is here. I did an interview today with Liberty and Finance, Dunnigan, Great interview. Don't miss it. And the bottom is a very elusive thing. What do we know happened? Dow 6,000 is when the Fed jumped in here and started buying everything. Quantitative easing 1, Dow 6,000, then quantitative easing 2, then Operation Twist, then Operation this, that, and the other things never stopped. Anyway, that's the story here, people. It's going to be very interesting to see eventually how this plays out. The issue, the biggest issue, and you know this, is this debt market hyper bubble. And at one point, this is going to sell off so fast and so rapidly. What am I going to tell you? Your head's going to spin around like the freaking Exorcist, and we're going to get a bond yield spiking around the world, and that's going to melt down global stock markets. Melt down global stock markets. Where's the bottom? Don't know, but it's nowhere near where we are now. It's Dow 6,000, 5,000, 3,000. Who freaking knows where it is? But that's when we're going to see the movement of cash again, bleeding out of the debt market, bleeding out of global stock markets. And in my view, it's going to go. Where's it going to go? What's Greg going to tell you? It's going to go into commodities. These are real things. They're tangible. Silver. I love silver. My favorite asset of all time happens to be silver. Gold. It's going to go into gold, platinum, palladium, other commodities, crude oil as well. And also I believe into cryptos. Watch how this plays out. We're going to be together. You and I are going to be together when this happens. Yes, there are many, George, and there is a lot of commodity exchange traded funds or ETFs. I hope that, George, that you subscribe to my newsletter. It's free. There's a link in the description of this video. Look through my posts there. I have put out multiple newsletters on exchange traded funds, which will give you exposure to commodities. Not just that, some of them even pay dividends. So look into these things here. Joey Socks, my commodity. Which ETF is that? Oh, it's going too fast for me to. Curious Tiberius. Thank you for that. Anyway, people, look, what else can I tell you? I don't believe there was more people, a group of people that have this down better than you. Look who's here. Magic Mika, Perry, Lava Girl, Geo Rider. Where's Lord Humongous? Lord Humongous is getting a pretty big following out here. JEPI, I love JEPI. I'm buying more of this stuff, people. I'm telling you, I like the dividend. I get paid every month. Every freaking month, I get that dividend. It's just pretty sweet. Anacott Steel, Jerome Powell, Anacott Steel. Buy, Jerome, I tell you what, you buy it first, and I'm going to follow you. Sarah Nichols. Look who's here. Everyone's here. All my friends are here. Alan Greenspan. Dude, how you doing? Mitch, thanks again. How long can they keep it? Look, we're already seeing the side effect of monetary easy money and expansion of this whole thing, the global money pool. And we're seeing this in the form of skyrocketing inflation. I mean, it was just a matter of time before all these bills were going to start chasing the same, or in this case, a lesser amount of goods. We all knew that. You and I have been talking about this for 10 freaking years. You see, it's interesting. They were trying to sell us that they could print all this cash out of nothing. They could QE1 and QE2 and Operation Twist and everything else they want to do. They could fund this, that, and the other. Oh, did you hear this one? Hundreds of billions of dollars are now being promised by the United States and other nations. I didn't vote for this, to rebuild Ukraine. Let's rebuild Ukraine back better. Yeah, let's do that. Let's make it another corporate entity here. Imagine my shock. You guys are making fun of my hairdo. Is it really that bad? It's just a little crazy. I know. Greg looks like he licked a 9-volt battery. Yes. I'll do something about my hairdo. All right. Anyway, Magic Mika. How's my hairdo? Is it that bad today, Lava Girl? Come on, my lovely ladies here. I love all of you. It's hot. Hair has horns. I know. Someone told me my hair has horns already. I got it. I can't. They don't want to go away. What can I tell you? Anyway, I get too much gel in there too, right? Yeah, I know. Whatever. All right, enough about the hair. Enough about Greg's hairdo. All right. I look like Wolverine. Okay. Okay. Wolverine. Lovely, lovely. Okay, people. I think we're gonna call this almost 20 minutes here. Come on, are you trying to tell me I can? You got to give me a thumbs up just for my messy hairdo. I got 477 thumbs up. You guys can't do better than that. I got 1,246 people here. 477 thumbs up. That's it. That's awful. That is just awful. Anyway, why am I moving to Florida? You know what? There's multiple reasons behind it. Vegas has been very good to me. Love this place. I'm going to miss a lot of my friends out here. But it's something I've wanted to do for a long time. I had a couple of close friends out there. My buddy Frank is probably watching this. My buddy Jimmy is probably watching this. Two guys I've known since freaking forever here. The old days of cruising Highland Boulevard, drag racing, street racing. Remember that, guys? I know you do. Jimmy's probably laughing right now. He knows exactly what I'm talking about. Anyway, yeah, well, I'm going to be, I just think it's time for a new adventure. Let's just put it that way. You know what I mean? You stay static too long. You got to change things around a little bit. Sin City horns. You guys in my hairdo, man. Enough with the freaking hairdo. I look like Eddie Munster now. Lovely. I look like Eddie Munster now. You know, I used to love that show, The Munsters. Freaking great show. Really was. Daytona, absolutely. Good. Okay, we're gonna be neighbors. That's fantastic. So I'm looking forward to meeting a lot of you out there. You want to hear something crazy? I went down to Florida February, I think it was, and I'm walking. I was in Lakewood Ranch. I was walking down Main Street. So I was eating over there, and all of a sudden, someone pays my bill for me. I had no idea. I was shocked. I was like, "What?" Like, yeah, at least this guy over there paid your bill for you. He knows you're from YouTube. I was like, I was blown away. I was blown away. A swamp boat? No. I got a Hemi Cuda. I got a 69 Camaro, small block tunnel ram. Runs probably I think at Bradenton, which I plan on going to, Bradenton Dragway over there. I'll probably get that car into the 1070s, at least I hope so. Lower elevation out here. Elevation's awful. Anyway, all right, people, enough of this stuff. We're going to get Adam's Family, another great show. All right, look, love all of you from the heart. I mean that. You know what? We're going to plan another get-together. Maybe when I get over to the Sunshine State over there, we'll do a get-together. I'm not going to lie. I thought about doing one. I did that one get-together out here. Remember, it was free to everybody. And then I get, like, death threats. I get death threats at least once a month, really. And some of these are a little frightening. And no one will do anything about it until you're dead. Anyway, so that's that gator wrestling. I don't think I'm going to be wrestling any gators. I'll be honest with you. Anyway, that's it, people. Look, I love all of you. We're a team. We're a family. Thanks for the thumbs up here. Got 612. I appreciate that. Alan Greenspan, thanks for being here. Packapoo. I know what you're talking about, dude. I know. And more than likely, I will be doing that. All right. I will see you all in the morning. Thanks for being here again. I appreciate all of you more than you know. Thank you. And I'll see you in the morning. And we'll cover more of this stuff. And I do want to hear from you. The stuff we covered here. Let me know what you think. Powell, Biden. Oh, yeah. Crossing my fingers. All right. I'm out of here. Love you a lot. See you tomorrow.